Today the Dow did a bearish harami. The difference in today's selling, even though it wasn't that significant, is that not only did the Dow do a bearish harami, but the S&P 500 did a bearish harami, and the Nasdaq did a bearish harami. These are all indications that the selling was across the board, whereas most days we might see the Dow up and the Nasdaq down, or vice versa. Today we've got all three indexes doing potential sell signals. Makes this very simple. If we see weakness tomorrow morning, more than likely they're going to take the indexes back to the T-line, which may mean a day or two of profit taking. Recognizing specific patterns such as the Doji sandwich, where we have a big day and then a Doji, and then the simple rule of a Doji, if they open up positive, they're going to take it up. Well, at one point during the day, the magnitude of today's trading was pretty much equivalent to the magnitude of the previous day before the Doji. It backed off a little bit, but it was still trading positive in a market that was fairly lethargic. So if this opens positive tomorrow, the profit taking that occurred today is over with. They're still taking it up, which is what should be the aftermath of a Doji sandwich. Also, because of the visual capabilities we have with candlestick analysis, we can pretty much see where the exuberance is coming into a trade. For example, in the Netflix, we are buying this right here because there's that Doji sandwich again. And we knew the simple rules of a Doji sandwich. First of all, we know the simple rule of a Doji is that we're going to move it in the direction how they open it after a Doji. We also know that if they open it positive after a Doji after a big strong day, that more than likely this day is going to be equivalent to this day right here, which would also allow us to analyze that this scoop pattern is now in progress, and we'd probably have some more upside. Well, now we saw some gapping up in the overbought condition that has us prepared with a very simple stop loss capabilities. If they gapped it up again, started taking it up, at worst, because we're seeing gaps up in the overbought area, you put your stop loss at the previous day's close, or I'm sorry, previous day's open. Because if the sellers were able to bring it back down through the open of that previous day in the gap up in the overbought condition, that pretty much tells you if they come back down through here, the bears are starting to take control, and they're probably heading back to the T-line. Well, that'll be it. We'll see you in the chat rooms.